Peter Rose, Longwood Currency Trading. It's the pushing to the far end of December 2021 here. FOREX trade entry, like a sailboat racing skipper would think. That's what we want to chat about today. Got my coffee, I need a little cream in it, and then we'll see what this is all about. Got my coffee and heading for the library. 8 degrees this morning when I woke up, and that's pushing it. First really bitter cold day that we've had. So, all right, got my coffee. We're in the library. As I said, it's pretty cold, but that's okay. We'll make it through the day. What does trade entry have to do, or what does sailboat racing have to do with trade entry? Well, let's look at, if you don't have any experience in sailboat racing, let's look at the small sailboats, because it's a little more particular there. You know, when you start a race, a runner's race, right? You've got a line on the ground, all the runners line up, they got their hands right on that line. If you put your hand over the line, you put your head over it, you're disqualified. So that line represents the starting line. And as soon as that gun goes off, boom, everybody heads for the track, right? Well, it's the same in sailboat racing, is that you've got this line in the water that's marked off by big buoys at either end of wherever that is. But in any event, the boats are obviously jockeying for position to get their noses as close to that line as they possibly can, so that when the gun goes off, they're the first to cross that line. Because in sailing, everybody's got the same wind, everybody got the same boat, so it's all about the skill of the skipper hitting that line right as the gun goes off. I used to race a small sailboat up at 12.5-foot penguin class with my dad when I was a kid. I learned how to sail when I was like 7 or 8 years old. And he was more competitive than I was, but I learned the tactics of that entry, sailboat race entry, which was that get that nose right up to that line. And man, you'd go back and forth, and all these boats are all over the place, and then boom, the gun goes off, and you throw the tiller over, bang, and off you go. Now, if you get a successful start, you're way ahead of the other folks, because you're ahead of their air. You know, the air is blowing, and you're beating into it. And if you got a guy up on the side of you, he can steal your air from you. So if you get a good start, you're ahead of the pack and getting down range. If your nose goes over that line before the gun goes off, you have to turn around, all the way around, and come back and hit the line again. By the time you do that, even in a small sailboat, everybody else is gone. The chances of you catching up are slim to none. Now let's look at FOREX trade entry. What happens when you get stopped out? You're way behind. You're not going to catch up to that price if it turns around and goes in your favor. If you're way back, 20 pips back, 15 pips back, if you're only a little bit back and you get stopped out, it isn't that you necessarily are wrong in the trade entry analysis that you did, it's that your timing was off, the when of the trade. Just like the sailboat skipper, it wasn't that he was wrong in what he was doing, but his timing was off. He didn't hit that line the right way. If you hit the line the wrong way, you get sent back. If you get stopped out, you get sent back. And you get left behind. What do you get left behind in trading? In time. How many trade opportunities do you think you're going to have when you sit down at the trading desk? Unless you're trading multiple currencies, which I advise against. Well, if you're trading a day trader like I am, on a 5-minute chart, you've got 12 decisions an hour, but not all those 12 decisions are going to result in a trade opportunity. You might have to wait for 2 hours. to find another optimum trade opportunity. And since the bulk of your trading has to be within the most active time periods of the currency pair that you're trading, your time is limited in order to get that trade right, have it run the distance that you need, and get out so that you can go get a cup of coffee and get on with your day. So you have to think about your trade entry the same way that a sailboat skipper thinks about that start of that race. If he screws it up, he's done. And not only does he have to start over again, but the time that he's lost by having to do that is going to be almost impossible for him to make up. And so the competitiveness at that start, that race start, is enormous. People screaming at each other. They'd be the best buddies afterwards, buying each other a beer or something. But when you're running for the race start line, that guy in that other boat, he's not your friend, he's not your buddy, he's not your companion sailor. He's a shit dog that you're going to beat into the water. And that's just the way it is. Do you think you should feel any different if you're stepping up to the plate to try to do trade entry in the $6.6 billion FOREX market? Do you think the folks that are out there, the 85% dollar volume size that the institutional traders have over you, what are they thinking about you? They're hoping that you jump the gun. They're hoping you don't know what you're doing. Jumping the gun is an anticipatory trade. You got a good setup, but you jump it too soon. The win is off. The fact that you enter the trade and it turns around and goes against you, if you've hit that trade with good timing, then you don't have to worry about that stop going against you. You can immediately pull that stop to break even, and then if it turns around, it'll take you out. Everybody complains at me for saying that. Well, you got to give price room to breathe, and it'll come around, and it'll go on if you got your trade entry right. Well, if you got your trade entry right, it shouldn't be going against you. Yes, trades do oscillate, but on a 5-minute chart with a 5-period ATR, if I give it 8-10 pips of breathing room, that's plenty of breathing room, buddy. If you get that wrong, you got to get out of there. What are you going to do if you're trading up on a daily chart? You're not going to be trading, every day. You'll be trading once every 3 weeks or something. So now you want to give it some breathing room. What are you going to give it? You're going to give it 20 pips? You're going to give it 200? Well, what's your profit target? Here's the old stupid risk to reward ratio. Oh, I got a 300 profit target, so I can take a 300 pip risk. No, you can't. That's just asinine. But if you take a 10 pip risk, and you're waiting for this price to oscillate around to get up to the 300 pip thing, it's not going to happen. But you know what I feel, and what I've done, even when I'm taking long-term trades, is I'm still staying with that 8 pip loss. If it goes 8 pips against me, it could go 80 pips against me. So why suffer through that? Take that short loss. If it turns around and then goes back up to my take point, maybe I'll consider taking that trade again. Or maybe the situation has changed a little bit. Now I'm thinking about this, whether it's a long term or whether I'm down on the 5-minute chart. Doesn't make any difference. It's the same thing. It's for sale, right? It's that entry process, entry point. It's the sailboat's nose crossing that start line. That's the critical point of the whole thing. If you get that wrong, you're not going to be successful. And if you're not going to be successful, why not take a short stop instead of waiting for the thing to come back, giving it 20 pips or 30 pips of breathing room so that you can lose 30 pips, 6 times in a row because you're a 40-60 trader. You can make money if you're a 50-50 trader as long as your win-to-loss ratio is good and you're getting a good average profit target. That's just complicating the fact that you don't really have to know about any of that stuff. What's there to study? Forget the risk to reward ratio and look at this thing like a sailboat skipper would look at his race. He's trying to maneuver his position, his boat, such that when the gun goes off, when the trade is hit, then he's going to be right on that good starting line, boom, and he's going to have a time advantage over the rest of the boats because his boat went across the line first. And that timing advantage will remain with him as long as he doesn't do something stupid. The other skippers are all equally qualified. No one beats you. You lose because you do the wrong thing. It's just like in chess. If you don't know what you're doing, you get beat because of that. Not because the other guy was all that much better. Because you don't know how better he is until you get into the middle game in chess, right? But you got to get to the middle game. You got to get the nose of the boat over the start line, and you got to have it keep going. You can't get sent back. And then you trade entry. If you get it wrong, get out so that you can take another run at it. And if you get that wrong, get out so that you can take another run at it. Because if the trade entry at that point is good, it should be good for 1 or 2 more runs as long as you have a short stop. But if you go out 20 pips and get taken out, or even if it's going down and you're 15 pips and you think you're going to add to your trade so that things become better when the trade goes up because you're convinced that the trade is good, I don't see the logic in that. I mean, there's ways of working yourself out of a jam, and that's certainly a viable solution. But where are you in your trading journey? If you've got less than a year or 2 years of trading, you've got no business staging lots. If you can't do it as an all-in, all-out with a 1 lot, all the rest of the stuff is mute. That's just stupid. It has nothing to do with trading. You've got to learn to hit that entry point and have the momentum for that price to continue forward. And then, if you have the grapes to set the short stop to start with, keep that short stop by bringing it up to break even. And don't listen to the idiots that are telling you different. A break even trade is fine. It doesn't count for anything, but it doesn't cost you anything. And if it turns around, you can get back in. And if it doesn't, and it keeps going south on you, you can say, man, I'm glad I got out of that. So, if you don't have any experience in sailing, just go to the library or go online and look at small sailboat racing theory and coming up to that line and see all the mental calculations and things that skipper is needing to do in order to have his boat nose right on that line. You'll be surprised, and it's equal to what we have to do as traders in preparing for trade entry. It's long been my position that if you don't have a good trade entry analysis process, you're not going to be a good trader. You may be a lucky trader, but eventually that'll catch up to you. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.